Hi there, I'm Dermot McDermott and I have Dermot O'Leary from Goodbody Stockbrokers in Dublin on the line to have a look at some news surrounding the Irish economy. Hi Dermot. So despite the fact Ireland is back in recession and public debt is nearing €200 billion, Standard & Poor's has actually upgraded the country's rating from stable to positive. The rating agency believes Ireland's government debt burden as a percentage of GDP is likely to decline faster than expected. So Dermot, would you agree with Standard & Poor's most recent assessment?
I would tend to agree, actually. If the main concern, I think, for the market over the last number of years is the fact that the debt level just kept on rising and uncertainty about when it would peak. But we've seen for the last, probably since the Troika arrived actually in Ireland, that the estimates for the peak debt level at around 120%, just over 120% of GDP, has remained pretty stable, and now it looks like that debt will peak this year and then start to fall over the next number of years because of growth and obviously because of the deficit cutting efforts. So I would tend to agree that we will see a peak in the debt level, and economic growth will help to bring that down over the next number of years.
And at the beginning of this month, the central bank announced the introduction of a revised code of conduct for lenders, governing how they must deal with borrowers in arrears. Now, Standard & Poor's have said they believe it could slow the rise in mortgage arrears and may allow lenders to commence repossession proceedings sooner. Now, how big of an impact do you think this will have? And of course, do you think it could depress house prices further in the short term?
Yeah, well, I wouldn't be that concerned about the second issue around house prices being depressed further. I think we've got to the stage because of pretty much no building over the last number of years, that the supply of housing has been reduced significantly. And what we're actually seeing in parts of the country, and this is important that it is only in parts of the country, that house prices are actually starting to rise again because of a lack of supply, believe it or not. And that's particularly happening in the capital. I think the speed at which the repossessions will happen will be very slow, which will mean that it will have little impact on the market at all. In saying all of that, I think it's important that it is happening. We've had practically no repossessions for the scale of our arrears problem in Ireland over the last few years because of a number of different reasons. One is the fact that it's been government policy to keep people in their homes. And second of all, there was a legal impediment which actually may be closed this week, which prevented lenders from actually foreclosing on properties as well. So given the scale of the mortgage arrears problem, there will have to be an increase in repossessions, and that will basically act as clearing out the market. I think it's been delayed thus far, and I think it's probably a step forward to actually get to the stage where we're going through the process of clearing out the system.
The rate of inflation increased in June as the price of transport, hotel, accommodation and rent all increased. So Dermot, do you think this is the start of inflation beginning to rise again, or is it just a once-off?
Inflation is not an issue in Ireland whatsoever. Domestic inflation is extremely low, and actually we've seen the rate of inflation over the space of the last few months actually decline. I mean, I think it's a one-off blip that we're seeing it actually increase. Inflation is largely going to be determined by external factors like oil, for example. Energy costs in particular play into the inflation rate. But in terms of domestic inflation coming from economic growth, domestic demand, I can't see it because there's still a lot of slack in the labour market. The unemployment rate is still close to 14%, although it has come down. So there's little in the way of inflationary pressures here in Ireland.
And finally, many still believe we have quite a bumpy journey ahead. What are the main challenges facing the country, which is actually slowing down recovery?
I think the risks for Ireland have moved from domestic risks about, up to about 12 months ago to international risks. So we've seen over the last year domestic demand starting to stabilise, consumer spending starting to stabilise, investment is actually starting to grow. government spending is still falling, but at a slower pace because the pace of consolidation is slowing. So that drag from domestic demand has largely been left behind. But what we're seeing now is a slowdown in exports, and particularly in Q1 we saw a particularly sharp reduction in exports, particularly because of the pharmaceutical sector, and pharmaceutical exports from Ireland are very, very important, but they fell because of the so-called patent cliff. We are also seeing the effects of the ongoing recession in the euro area affect Irish exports. So, with exports being such an important contributor to growth in Ireland over the last number of years, it is a concern that we're actually now starting to see exports fall. So if the recovery does not continue at the expected pace, it'll probably be because of that continued recessionary conditions in the euro area. So that's the main risk as far as we can see it. In terms of domestic risks, I think it's still around the mortgage market and the mortgage arrears problem. Policymakers here have still not, despite their best efforts, got a handle on that particular problem, and that's going to be the big policy focus, I think, over the coming 12 months.
Thank you very much, Dermot. Well, viewers, do stay tuned to Dukascopy TV for more Forex updates and, of course, economic analysis. But for now, goodbye.